I just want to talk to you about some of the action that we're seeing on Wall Street. As I mentioned earlier, we've seen bond yields on the rise. In your mind, is that simply the cause of the selling pressure that we're seeing, or are there some other factors that seem to be weighing on the markets this week?
Well, I mean, bond yields are back up 10 years near, its year high, and, the 2 years is knocking on 5% again. And I think that's, a cause caused by the weak auctions that we've seen this week and a little bit last week. Starting to wonder, is supply really starting to outstrip demand? And as we see similar with the yen story, there's not a clear direction from the BOJ or the Fed yet. And I think you're going to see yields in the yen, continue sort of in that upward trend until we get a clear message of this is when cuts are coming, or as more than one president has now started to say, maybe there's a hike coming. But as long as we sit in this middle ground, we're going to continue just meandering in these directions without much.
All right, so rudder. Alex, I was looking at your eyes when you said possibly a hike's coming. It doesn't sound like you're looking forward to a possible hike. I don't think anybody on Wall Street is. So we have two big economic reports coming up. Of course, PCE tomorrow, the Fed's preferred inflation gauge. We always say that. And then we have the second read of GDP today. The first read led to a sell-off. What are your expectations for today?
I think we're going to see more of the same. I don't have any reason to believe that GDP miraculously turned around from our sort of revised estimates. But I think the Fed has kind of priced that in. Some of that is not exactly all bad news, right? We'd seen a lot of fairly strong indicators, some lagging, and the Fed is looking to fight inflation, or does want these numbers to go down. That does mean necessarily some injury to the labor market and some injury to some of our other favored metrics. So that may be somewhat welcome news.
So a soft GDP might be welcome news because the soft GDP before was not welcome news. It led to the sell-off.
I think what the Fed is looking for is a series of indicators that actually indicate, hey, it's time for us to step back in and do something.
All right, so things might change.
Flopping between the two.
All right, so you also say investors are spreading out their bets. But this week, as we've seen bond yields rise, the only thing that's in the green is tech. Do you think investors have kind of changed their mind now that bond yields aren't as friendly? What's going on this week? Why is only tech in the green?
I think most folks had done that. That doesn't mean it's going to work all the time. I think right now what you're seeing is tech had been up. If you look at the size of NVIDIA, just its market cap is so big that folks would keep piling into that trade. It's not a bad trade. We saw HPQ had some positive numbers, did well. So I think that makes us look like, hey, something is going to work there.